All right, what's up, guys? Okay. All right, we should be good. We live. Mago Mondays. I like that. What's up, Lindsay? Oh, it's Lindsay on today. Usually it's Seth on the YouTube stream, I feel like. Jonathan, what's good? What's good? All right, guys. Let me get my life together real quick. Gonna go ahead and send out a couple notifications. You know, put the people on. Let them know what we're up to. What's up, Eduardo? Dow Spec. All right, let's see here. Things are very slow. Hold on, that's not good. Why are you doing this? All right, 1 second, guys. Let me get everything all situated here. Okay, we got that going on. All right, cool. All right, let me know, guys, where you guys coming from. What do you have on the radar specifically? All right, sent this out. SF in the house. What's up? So we have the VIP community in here, Powerhouse community in here. We got people from all places, different communities, independent learners. Everyone's welcome. All right, hold up. Let me switch this up real quick. Cool. There we go. What up, what up, what up? All right. Quit that. Exit. All right, so just sending the notification to the Telegram, the Instagram broadcast. Cool. That's really it. I don't really need to do too much more. If you hear, right? You can definitely share it though. That's cool. If you want to tell people, I'm not against it. I'm definitely down. We got Seattle in here, Alexandra, Raleigh. What's up, Sam? Third session of the day. Boys, learning, growing, studying. I love it. What's up, Michael? Yeah, this is my third session today. I did a New York session, English, Spanish, and then yeah, we have the one that we do here on YouTube every Monday. We had a pretty awesome start to the week. Nice trade, played out super well. I took a setup on my own as well, but yeah, I mean, market's moving really well. I think with public trade ideas, 12-3 on the month, so definitely way higher win rate than usual in terms of indices specifically. So it's pretty solid month. And I'll go over some of the things. I'll go over today's NAS setup here so you guys can kind of see what exact idea, and it'll be super quick. And then yeah, we'll go over a couple things here. Talk about different markets. We'll talk about some currency stuff, metals, a little bit of energy, crypto, probably not too much on stocks. And then yeah, we'll go from there. But I'm excited, guys. Next Sunday, I don't think I'll be live. Actually, I can guarantee I won't be live next Sunday, and you probably won't see me live for 2 Sundays back to back. Actually, today's Monday. Never mind. So I missed you guys for one Monday, but I think the Monday after, so it'd be August 5th. I think I will be live that day. But I'll try to get some content out for you guys that will be useful to you. whether it's market analysis, whether it's psychology stuff. So I'll try to get something out for everyone here to learn from. Normal, my for the members, like all the live streams will be normal. So next week, yeah, Sunday, except for Sunday, but Monday through Friday should be fine. So yeah, just giving you guys kind of a quick update. We'll be in Puerto Rico. So Nance and I have been working on this retreat out there. It starts on Sunday. Is it Sunday to Thursday or Sunday to Friday? I think it's Sunday to Thursday. And so we'll be out there trading with the squad in the mornings, and then just going out on adventures, you know, like waterfalls and islands and national rainforests and stuff like that. So yeah, it'll be a little bit less online stuff, but I will be live in the mornings. So everyone that plugs into your sessions with me, Monday through Friday, we'll be doing that together. And then from there, I'll probably be off the radar for the most part. But yeah, so that's what we got going on for next week. We're planning another traders retreat here, probably for maybe, what do you think, January maybe? Yeah. Probably around January. So yeah, it's gonna be cool. We host, basically it's like we just do trainings, and we'll live trade together, and then just explore, kind of travel, have a good time. So yeah, we'll go through it. But anyways, let's dive into it, guys. I'm gonna go over a couple different things, and I hope everyone's having just an amazing summer, enjoying it, having a blast, focusing on the process. I know that, man, trading can be pretty exhausting, just the journey overall, the constant, you know, especially when you're figuring it out. It's like there's different phases. Is this even gonna work? Yeah, is this even real? Then there's figuring it out, the technicals, the risk, and all of the things, and then you're at a point where you're like, why isn't this working for me? And then eventually it's just, okay, I just gotta do the things that I've learned, and then not get in my own way. So regardless of where you're at in the journey so far, just keep staying at it. Trust me, just keep staying at it, and be more thoughtful of how exactly you're evaluating your processes. Like, if you're only looking at what you're getting, then you're looking at it wrong. But anyways, we'll dive into stuff. Let's look at the markets. Let's see what's happening. I'll do a little bit of crypto, but probably towards the end. I'll block that all together. But we're gonna talk about what's going on right away, like what's going on with the like what to expect, the timing of things. We'll get into indices as well, and yeah, and really go from there. So let's see here. Get that on, and this here, and we should be good to go. All right. So let's see, Dylan, what'd you ask me? What you got going on? Hey Mike, do you rap like Nas, because that NASDAQ trade was straight bars earlier? All right. It was a tough crowd, man. That's me. All right, cool. What's up, New York City? Hey, what's up, Cruiser? What's good? Got the homie live. So, all right, guys. What we got going on right now here is not too much. So today we already kind of took out the slower day in the markets, especially with the dollars. US dollar as a whole, pretty mellow, pretty relaxed. You guys didn't see too much going on. Metals didn't do much today. Nothing really happened. Indices had some action, and that's really it. And so that was cool. We got to take, and I talked about this, if you're on the Sunday session here, I do a YouTube one too, but in Spanish. I talked about how indices will probably have most of the action to kick things off. I do think that for the next, honestly guys, for the next 4 months, July, August, September, October, I guess 5 months or so, be aware that the political space is going to influence the market for sure. So there won't be certain news events, but the markets will be moving. So it's already just like everything else. These are orchestrated events. Like, these moments are programmed. So if you're trading at least the way that I trade, or some version of that, then your technicals should still be pretty solid. The only difference is that really it just might happen at times where you just didn't expect it to happen. So make sure you're using your tools like your alerts, your alarms, your limits if you're able to manage them, because there's gonna be moments like, oh, Biden drops off the race. What a coincidence that the market plays out super well, especially based on our technicals and our approach, our narrative with the market. So those things will happen. Tomorrow, again, another no high impact news event day. I'm pretty sure tomorrow something's going to happen. We do have the Ethereum ETF that will happen tomorrow. I'm curious what that will do to the market. We'll look at that in a little bit later. But then the rest of the things that we got going on really are Euro and pound news. So if you're a London session trader, drop in the chat London. If you're a London session trader, let's see who's on. I'm not really a London session trader. Rarely, maybe one day out of every 2 weeks or so, I'll end up doing some London session stuff. Or if I see something in Asian session and it bleeds into London session, sometimes I'll stay up a little bit later, which definitely is a hindrance to my sleep, which then I have, because I'm up early for New York session. So, you got to be careful with what you're doing and what cost it has to your sleep and your rest and your energy. So, but with that being said, for London session traders, for those of you that stay up, or maybe you're in Cali, I know the West Coast, you're not staying up too late to kind of get a little bit of that London session action. So I know some of the West Coast plugs in there too. But yeah, so that's Euro and GBP. That honestly, we could look a little bit at Euro and GBP pairs, but the market will probably set up way better by tomorrow. But we can take a look at some stuff, maybe some higher time frame stuff. So we might be able to look at that. And then from Wednesday, we have more fun with New York session. Canadian dollar, USD, Thursday more USD, and Friday more USD. Now out of the dollar news events, the news event that I think will have the most influence this week is going to be outside of the ETF, the ETH ETF. It should be the Thursday advanced GDP and unemployment claims. Having both of these at the same time should be fun. This should be a good one. So this comes out every quarter, this advanced GDP, and as you can see, 30 days after the quarter ends. So here are the notes. While this is quarter for quarter data, it's reported in an annualized format. Blah 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 blah. So anyways, this one usually has the most impact. So just for you guys to have here, now you know. All right, now you know how to schedule a little bit effectively. You know how to set alarms. Like, oh, I should probably be aware that there's a news event at this time, so that in case you already are in trades, you're managing it appropriately. Or you can take a look at the market, 15 minutes, 30 minutes beforehand, and you kind of have a general idea of, okay, where are we now? Should I be exiting out of positions? Should I be getting ready for positions? Should I set limits? Is this going to be a market execution type of situation? So yeah, you guys can have that set up and go from there. Someone asked me, do I believe in Jesus? I definitely believe he was real, 100%. Can you share your ideas to strategy pertaining to Shiba USD? It's the strategy, like my entries and exits are exactly the same thing I would do. I'm not invested into Shiba. So I haven't really looked at it, but similar principles. I don't think, in my opinion, out of all the meme coins, I don't think Shiba's got the most, they don't have the, in my opinion, if I was going to pick a meme, it wouldn't be Shiba, but the squad, over the time, Shiba's definitely had its moment to shine. Someone asked me, hold on, let me transition here back. Someone asked me, what's up, Dylan? I've been watching a podcast with an institutional trader, and he said prop firms aren't necessarily real props. So I wanted to ask if you know anything about the institutional props he was talking about out of curiosity. It's basically a hedge fund. Like, that's really what... Okay, so, yeah, I'll answer this question because this is, I think, pertinent. The market conditions are so different. So when you're trading with prop firms, one, nothing that you're doing is real. So you're trading in a simulated environment, right? So you're not like opening up certain amounts of contracts or positions. So like it's not like you would ever have any influence really anyways, but the conditions are different. So even how your orders are filled, how slippage is filled, all of these things are super different. You're not managing real capital. So eventually, for example, if you're working with millions of dollars, depending on what you're doing, if you're working with like small caps, right, then your orders need to be filled. So you might not be getting priced in the same way. So there's a big difference. And also the reason that these prop firms are pay out 80-20 or 90-10 or whatever is because the business model is totally different. For example, like a hedge fund, there's what the hedge fund keeps, what the client keeps, and then the hedge fund also usually has a performance fee. So the business of a hedge fund is we need to make returns to make money, and we also get a fixed amount. It could be like 1.2%, 1.5%, 2% performance fee no matter what. Regardless of results, there's a performance fee. So that's how those companies can stay afloat aside of other little income streams here and there. And then the client is the one at risk. So the client keeps the majority of the gains. Whereas modern era like CFDs, future prop firms, it's just a totally different business model. You know, like the money, it's more of a casino type of business model. And yeah, in my opinion, I mean, most of them are just too aggressive. So like it doesn't really end up working out. But yeah, that's a good question. I don't know exactly to what you're talking about. I don't know what podcast you're talking about, so I wouldn't know the exact specifics of it, but that's at least one angle in which can give you some ideas. My opinion, like, it's cool. Like, it's not that it's just bad. It's just like what it is. You know what I mean? It's just that's actually what it is. So, all right, cool. Let's get back into the market. So this is what we have going on. What I'm going to look at first is I'm actually going to tackle on indices first, because since there's no USD news tomorrow, let's see if I can help you guys spot a opportunity here in the market. And I'm going to kick things off. I already have an opportunity that I see, and it's actually with S&P. So take a look at this, guys. When we look at indices, the common thing you want to understand is, one, obviously you can take a look at the big picture. So where are we in the market? What's going on? As you guys know, indices have been on an absolute rampage since really October of 2022, and then again in October of 2023. So that beginning of quarter four tends to be a very nice higher low for indices overall. And we've seen summertime, July 2023 peaked, and then you had the last peak was more so December 2021. So obviously it's not perfect, but it is interesting to kind of see where we're at in the market overall. But now, why are we looking at this here? All right, why are we looking at what's going on big picture? Because we want to know if we are going to look to take buys or sells, how far should we be looking? How far should we be taking this? So the market here overall with S&P 500, in June we saw a higher high, and then just the next day gave us a higher low before it continued. So we could look at this and say this kind of looks like some consolidation, some sideways movement. And as we get into lower time frames, we'll get a little bit more detail and see if that's what's going to happen. But I mean, the market slipped under, cleared some lows, played from here. We definitely have some imbalance with S&P over here. So wouldn't be surprised if we get down here eventually. That doesn't mean it's going to happen right now. And here's why. As the market started to dip with S&P 500 last Tuesday, it kind of peaked, and then we saw the majority of the week work its way down. What we started to see happen was on Friday, we got a pretty aggressive drop. So, words of wisdom. Oh yeah, that's the guy that scammed a ton of people. So, funny enough, since he had a prop firm that went out of business, that's interesting that he's talking about prop firms, or whoever's on there with him. Huh. So what are we seeing? We're seeing a shift in momentum, right? So we're seeing lower lows, lower highs, lower lows, and then now we're at a higher high, right? So here, and we're kind of like fighting for this higher high. We're seeing a shift in momentum overall, and on the 1 hour, it looks like we've been trading above these previous highs for a good 5, 6, 7, 8 hours. Now, as we dive in and get to a more narrow time frame, and now we're getting to the 15-minute, right? We're getting fractals, so from higher time frames to lower time frames. And as we work our way down here, I want to make sure my face doesn't get in the way of any of the chart. But what do we see happen? So today the market was slowly climbing. You know, out of London session, the market was going bullish, super bullish. So there was just a lot of buyers entering the market. And with New York open, the market definitely got excited, pumped up, you know, about 22 points or so. Some people talk about these in pips. I don't know, but I refer to them as points most of the time. But anyways, so we chop up and down, and we actually take a NAS trade earlier, and I'll go over that in a second, but I want to give you guys the idea that I'm waiting for. But what happens is we get this drop here, right? And this drops about 25, almost 26 points, and we get this nice push down. This drop, the intention behind a move like this clears out the buyers that just chased post New York Open. They just like ran this up here. Everyone got excited. They're like, all right, cool, let's go. We're doing it. We're doing the thing. Of course, S&P loses momentum and works its way and crashes all the way down in a very quick manner. 25 minutes, drops. From here, then the market quickly recovers, but not only that, we get higher highs here. So we get higher highs, we get a bullish structure. Now we have more confirmation that, okay, we are shifting towards the upside. So we have better opportunities for buys. So specifically, why is it that I'm looking at S&P today and not NASDAQ, not US 30? What happened? And why? And the biggest thing, at least as of right now, this could change. But right now, and you know what? Actually, I have a question for you guys. For those of you that are not, actually it doesn't matter. If I uploaded, for example, like I know a lot of you that are right here right now, like you're probably not a member in the community, but if I were to show you guys the before and afters, like the video clips, like for example, today's NAS setup, if you guys got to see me explaining it before it even happens, and then, you know, like how we go into the idea, going into drawdown, like narrating the whole process and the after, is that something that you guys would want to see on this channel? Because I do think it's important for you guys to kind of see the live action, kind of like how we get into it, and then obviously the after. But y'all let me know if that's something you'd be interested in. Now, right now, you have US 30, NAS, and S&P. Similar movements, right? Similar movements. But the problem is US 31 isn't at a higher high. NAS got above these highs super briefly before it came tumbling back down. Meanwhile, S&P did get above these highs and it finished the day, I mean, up here. So this is pretty bullish. Like, this is pretty bullish. So here is what I'm waiting for. Right now, the way I'm looking at this, I think we would, if the market were to get down to here again, S&P is probably going to hold its structure the best, more than likely. For example, and I'll just give you guys an example right now. Right now, NAS is sitting between, actually just above this 38.2. US 30, and now, interestingly enough, US 30 is actually kind of working its way up a bit more, but we haven't really gotten above previous highs. And then you have S&P that's trading way up here still. So right now, in terms of structure, in my opinion, we're way up here. It looks like if this were to come down, there's a good chance that it's going to pull back with the least amount of force. So yes, you have retracements between S&P, NAS, and US 30, but it's going to really come down to which one's going to hold this best. Which one's going to come crashing down or working its way down, but also stay within our structure. Maybe this evolves and US 30 goes a bit more bullish, and then cool, we can change our sentiment to US 30. But for right now, right now, S&P is going to be the one. And you can see this drop starts to happen at 10:15 Central Time. 10:15 Central Time, the market starts to dip down, liquidates buyers, and then from there, guns it. From here, then we just pop off. So this is the S&P setup that I like. From now, I'll just wait because it could change. You saw a similar situation with NAS. It came right to NAS right here, but NAS is dropping a bit more bearish anyways. And then if we look at US 30, US 30 starts coming down from over here, crashes all the way to here, and then now we're still waiting. So it starts dropping from actually a very, very high place. So right now, S&P would be the move. And then where would I look to take this, right? Where would my entry be? And here's where you can use the past in your favor. You can see, okay, where have there been key levels of support in the past? What are these supply zones? So you've seen like the market's reversed off of here. It struggled in this area a few times. Similar situations right over here, right over here, right over here. So honestly, buy setups around here with S&P kind of makes sense. Noticing how we've been reversing off of this area just over and over and over again over time. It looks like a great place for buys. Obviously, we'll have a bit more context by New York session. I doubt this plays out before New York session. I'm very much. I have a high probability that this plays out during New York session here. So cool, we have that there. We'll wait on that. I have my alert set here for S&P, and then where would I take this to? Right now, that's the next question. Entries are great, but what about the exits? Like where could we go with something like this? Honestly, right now, if you're trading intraday, I wouldn't even look to go too far. You know, you have some imbalance in here, some more over here. You can just do a fib extension, ride that. I wouldn't go for anything too crazy, right? 2 point something R. Get the job done, pay yourself. Now, do I think that it can go higher? Yeah, for sure. There's a tons of imbalance up here. Does it have to happen tomorrow though? Probably not. But also, if we do have ETH ETFs tomorrow, and when the crypto market runs, it's easy for the narrative to carry on with indices and vice versa. So there is an off chance that kind of stirs and is used as an excuse to move indice markets up a bit more as well. So something to keep in mind is that ETF that could be useful towards the indice markets in general. Just kind of like a bullish sentiment overall with markets. Something to keep in mind. But either way, I mean, we've kind of been squeezing since Thursday. It's obviously a wider squeeze, but a breakout is definitely possible. But I would say at least, I'm thinking a 2.5R at least, if not more. But it is also going to come down to where you're looking to enter. This is for me, this is a pretty big stop. I don't usually have stops this big, but I mean, it's definitely worth it. So this is my idea for now. And then, I'll share this here in the chat so you guys can have that. All right, so there's S&P. And then we have NAS. So what was NAS? What did NAS look like here? NAS, here was the original setup. So I'll walk you guys through what I was looking at today. And this one, I know if you were on the live session and you took this with me, then let me know. Let me know in the chat. If you were live this morning with your boy. How do it's cool. Is there a way to open this again? Let's see, stop. It was like 1725 or something. It was something like this. Stop was like less than 40 points or around 40 points. And then exit was at these highs. So we're looking at a little over a 2R. Now, why do we take the setup? First, NAS broke even on NAS. Cool. I used to email, saw a handful of you. Now, what happened? New York Open pushed the market down. This took care of a lot of liquidity that was building up here, some of the liquidity that was building up, and because we had a kind of this trend line going, yeah. So when New York Open happened, it started to clear out some of these retail buys, and at the same time, at the exact same time that was happening, US 30 and S&P did something really similar. So same as sweep, and then we got higher highs. So then price gave us a high up here, and then we traded up here. We were up here up until for a good like 20 minutes. So right into this, the next 20 minutes or so. NAS had the best structure. Out of any of these ideas, NAS actually stayed up here. The rest of them started to dip down pretty quickly. So this is this is literally New York Open, so you can easily see money comes in here and pushes this down. Cool. And NAS is the slowest one to go down, to work its way into the zone. So once it got into this area, I was like, all right, cool, taking buys. Of course, I did want to take buys a little bit lower, but I was like, let's just make sure we lock something in here. And so I took an entry here where we had seen a little bit of resistance, some imbalance. Cool, took this with the 40-point stop. I was like, look, 80 to 100 will be good. So yeah, locked it in at right around 80 points, and this worked its way higher. Awesome, super easy, nice and simple. 2 risk reward. You're up twice as much as you risked. Fantastic. At this level, at a 2 risk reward, if that's like your consistent exit, you need to be right 35% of the time, and you can make money. But you just have to be willing to lose and not get in your own way, which you will lose. We all will lose at some point. That's why this is all about how good are you at losing, the quality of your losses, the controlled losses. So easy setup. Some of you that took this lower, some of you I'm sure hit 3 Rs, maybe even 4 risk rewards on this setup if you took a deeper entry with this one. So this one was easy, super easy to take. And then now, obviously, the whole environment has shifted a little bit. And the reason I didn't go for higher highs, the reason I didn't go for some crazy amounts is because, one, I still saw liquidity that we had over here. So I was thinking, well, what if the market wants to tackle on the rest of the liquidity? This could go down. And that's exactly what happened. Look at US 30. With US 30, we had tons of liquidity here set up. So it was like, okay, this could go down quite a bit, and then the setups could play out. So that's what ended up happening. So yeah, right now, S&P, textbook play. We're just patient. We didn't take S&P here because NAS was way up here while S&P was crashing down. Same thing with US 30. So cool. Those are indices. S&P has been shared with you guys. Now what I want to talk about is a little bit on the dollar stuff, right? What can we do with USD? You didn't get out at break even with NAS? No, I didn't get out at break even with NAS. And here's why. With NASDAQ, here was the original move. All right, so here's my entry. My entry's here, okay, right around here. Market reverses, so you have the big push, right? This goes up like 75 points. And the original move down for me here, we see it. It's about 77. So basically the same thing, right? Market reacts super well. This thing goes off. Awesome. At this point, pretty normal. People would adjust their stop loss, right? Because you already went up into profits. Why wouldn't you? Now, I didn't go to break even. I tightened my stop. So from down here, I tightened it up to over into this area. Why? We went up so aggressively that in my mind, I'm thinking, okay, this could pull back into these imbalances, right? This could pull back into because my entry was like right here. So my thoughts are, okay, this could fill the imbalance again, and then there's a chance it can go run. So I said, okay, I'm willing to tighten my stop. I'm willing to still lose something, but for the chance of letting this possibly fill imbalance and then continuing. That is what ended up happening today. Didn't end up, because for example, here would have been a -1 risk reward. So I tightened it so it would have only been half of a risk reward loss. Came into the zone again, chopped up a bit, then started to push. Once we started to get this push back up here, then I just tightened my stop and then it ended up running, hit TP, cool. Sometimes, all right, actually most of the time, if my entry is precise enough, like for example, let's say I would have taken an entry like over here. Super precise, very minimal drawdown, and the market kind of chops its way out of my entry. Then I know, okay, there's not a lot of reason for this to come back to entry. I'll go break even. Or, you know, like if it's super, like if we would have sniped it, let's say you would have gotten like an entry like right here. Then yes, on this big pump, all right, let's protect this. Chances of us getting wicked out are pretty low. So it all depends on how you manage stop loss. At least for me, it's definitely relating to the market conditions. Like what are the opportunities that could follow? So yeah, just some things to keep in mind as you guys are trading along here. Something else that is interesting is we end up seeing liquidity here. So market does drop, creates more equal lows. With S&P's situation here, with the setup, I would probably wait and see if NAS is going to clear these lows. Because if NAS clears liquidity, then that could kind of help you get a better entry. Because now, you know, okay, hold on. NAS is like right there to set up for liquidity grabs. So that might end up giving you a better entry. So instead of trading up here, because you're waiting for NASDAQ to get to that area, then your entry might drop down a little more. So just something to consider. Okay, so let's move on to some currency stuff. Right now, I'm really curious what the dollar wants to do. The dollar successfully liquidated all of these springtime buyers, and then now we quickly came right back up. So in my opinion, I do think the dollar is on its course to a bullish, the rest of the month to be relatively bullish, but I'm curious to see what happens now though. Right now, I don't have an entry with the dollar because one, it didn't confirm higher highs exactly, and I want to see what this does. Is this going to come down to fill imbalance, or is it going to make higher highs first? Overall, generally, I have a pretty good perspective on what the market is going to do here soon. But in terms of precision, it's different. Now, remember, and it's always important, DXY. DXY in general, guys, it's a reflection of euro dollar for the most part. Like DXY is composed of 60% euro USD. So what DXY does, it doesn't influence the currency pairs. The currency pairs influence the DXY. That's why I don't really give this too much energy for precision. It's more just like helping you understand direction. At least for me. What's up, Marco? What's up, Lali? What's up, Efrain? Big correction on the weekly. Yeah, so I think we go bullish from here. I think we we get a little bit of a pullback and then we rip. So seeing us hit 105, seeing us hit over 106.50, I wouldn't be shocked if we get this by the time Q4 rolls through. So all right, cool. So that's the dollar. To have a higher confirmation, higher probability confirmation, I'd want to see higher highs. Let structure stabilize up here, and then we'd probably see some pullbacks before this thing rips again. Now, how do we apply this to the currency pairs? AUD USD has just been melting away. So we got some nice little moves here. Nice little movement. So we had that sweep to the upside, clears out retail sellers. Market just crumbles. And it's been staying bearish. So sell positions up here makes sense. Definitely makes sense. It's just a matter of waiting now for price to get there. However, we always want to keep in mind what else is going on. Is NGD USD, because could this get to this area, or what's the setup? So AU, this happens on really the open of the week. And now we're down here. NGD USD, similar situation. On the open of this week, pops up and then crumbles down. Now the difference is NGD USD doesn't really clear liquidity quite the same way. Yeah, we do pop up, but it's not really that liquidity capture in the same format that you're seeing AU. Like look at AUD USD, clearly equal highs, resistance, sweeps it, drops. NGD USD, yeah, comes up higher, but is it really liquidating tons of sellers? Not really. So I am a bit leaning more towards AUD USD, but that's for now. Now, Euro USD. Oof. This one, I feel like anybody buying EU has been just like, oh my goodness. Everyone's just been, is this going to stop me out? Is this going to stop me out? I haven't traded Euro USD, and here's why. One, this was a move, this was Tuesday's movement, right? This captured equal lows. This move happened with everywhere, right? AU, NGD USD, GU, gold and silver, and it looked really similar across a whole bunch of different pairs. Then you have, yeah, it's been a nightmare for people, right? And then same thing, you had USD CAD, USD CHF, USD JPY. It did basically the same thing, but in the opposite direction. It spiked up and then came down and whatever. So cool. Anybody that was looking to, take EU, here's why I didn't. I'll tell you why I didn't. Even though Euro USD was the last man standing, and what I mean by that is AU got to these zones super quickly, so it was probably wasn't going to survive it. AU got into like this, basically this movement, while EU was like up here. NGD USD, price got into the zone. GU got in here, and then Euro was kind of the slower one. Euro and gold, they were kind of like taking their time to get to these areas. Now gold then crashed aggressively, and Euro was just really mellow. So at this point in time, it's like, okay, AU is the one that's here. It's still inside the structure. It looks pretty good, right? Now, here's why I haven't done anything with this. And I get it. I know people are looking at this. Like, I know you guys want to take this setup here. Market spikes down, comes up, plays off of here. I know some of you want buys in here. I get it. Here's why I'm not going to take it. All right, here's what my situation is. Again, what is it that we're seeing right now? We're seeing the mitigation. That's what we're really waiting for. The close of this big sell candle, people want to get in for the buy. People want the exchange of the sell to the buy. However, here's what happens. Remember, that's Tuesday. What is this move? This is Tuesday, 7:30 movement. Well, USD CHF it's still not there. You have equal highs, liquidity just building up for like a whole week for USD CHF, and then boom, market goes crazy. I totally forgot I had a tea right here. Spirit. Cheers. So we see the push up here. This sweeps these highs. These highs right here. Comes crashing down. By the way, guys, I'm going to say this publicly to keep myself accountable. I'm about to do a 5-day fast. It's about to get lit. I think I've done 2 or 3 days before. The whole week, whole trading week, fasted. I haven't had food since yesterday. Discipline at its finest. Mental barriers I gotta shatter. Physical too. It's gonna be lit. So we'll see it. Y'all keep me accountable. You know, we're about like, I don't know, 20 hours in or something. But that's easy. That's the daily. So let's see what happens. You know, but Friday. So anyways, USD CHF. We're nowhere here yet, right? Everything else on the flip side, you know, Euro is, if you were to flip Euro USD is like way up here. The USD CHF is big chilling down here, so not even close. USD JPY, similar, right? You see USD CHF is at like a 50%. USD JPY is at like a 38.2. So now it's like, which one of these two are gonna make it happen? Yeah, I don't need to eat food. I just eat pips. That's a really good point, Jesus. That's a really good point, bro. So I guess it's like I'm digitally not fasting. The trading account is not fasting. It's eating for me. I think that's a good place to be. I actually prefer it this way right now. I'm for that. Doing it for the greater good. So at this point, guys, USD JPY, it could be the one that gets here towards the end. Now there is some yen influence here as well, but that's the reason that I've kind of stayed away. Is I'm looking at, and these aren't perfectly correlated or anything like that, but as I'm looking at this and I'm looking at how the market's set up, I mean, I just do see that if the dollar is the influence, because there is no CHF news, there's no yen news either. So I think the dollar could be what pops up again and then ends up mitigating for us here. If we look at DXY, which is again a reflection of everything kind of combined, give or take, the dollar would kind of make sense for it to come up again. You know, like it's creating liquidity, so I could see why it would do that. So USD CHF or USD JPY, I see the setups happening. So one of the two are where I'm leaning. I can share both for you guys. I didn't take this USD JPY buy because I took CHF JPY and they played out really well. But actually I talked about this USD JPY setup on this stream here early June. So if you guys go back to the June streams, we had this one here. I think it was on a Sunday, like the 9th or something. No, it was Monday. It was the 10th. But yeah, so this one I actually sent this one over here. So if anyone had a pending order on this one, or you're just keeping track and you're just, you know, on your toes with everything, then you smack easy 3R and would have gone over a 5. So I ended up taking CHF JPY. And in this one played out a little bit better. But anyways, with all that being said, let me share the USD JPY chart with you guys and the USD CHF chart with you guys. So USD JPY here and USD CHF here. So those are the zones. Cool. So from there, that puts us now closer to metals. What's good with these metals, yeah? What's going on over here? So right now, we're seeing metals just crumble, right? We saw this come down aggressive, crazy aggressive. I took an L on a buy here with gold for the same reason that everyone else lost with anything dollar based, basically. So right now we did a good job filling in balance here with gold. Maybe we get down to here soon. We'll see. But the imbalance has been filled. Silver, full pullback. This did its thing, right? This had the complete pullback. It's a wrap. So now it's more about precision. So if we are going to see a momentum shift, if we're going to be able to position ourselves in some sort of buys, then I want to make sure that we are not guessing, we're not getting in early, but we're actually seeing a shift in momentum. So what's happening right now? Now there's a couple of things that you guys are probably noticing. One, gold has been bearish. It liquidated these trend line buyers, which was expected. That's why I drew the line there. But also, we did see a little pump here. So we saw a little bit of action up here. Market goes up, clears some highs, works its way down. So could we be seeing a sell? Could we see a sell here on gold? Well, let's get into the details, right? Let's see if it makes sense or not. The market really starts to push from right over here, which we're like basically at right now. So we do start to see the market work its way higher right there. That does a good job of clearing liquidity and prices right there right now. So we definitely don't have any bullish structure yet. The market's still in a downtrend. So is this sell? Does it make sense? Well, now we take a look at silver. So we're looking at gold trades, and this is from Monday's. Today's Monday. This is from today's London session. Move up before it drops around 5:45 a.m. Central Time. Silver, on the other hand, we already got way above this into this imbalance. So silver on the 5 minute is starting to go bullish. But if I want to go and trade alongside, the 4-hour time frame, if I want to go against the 1-hour time frame and my overall trends, I need to see the market shift momentum for like a healthy amount. So with silver, we got to crack 29.40 and change. With gold, we got to get above these areas if we're going to see any sort of possible buy setups in the future. So for now, bearish makes sense. So what's the issue? Should you be taking gold sells? I don't think it's a bad trade by any means. I don't think it's terrible. It looks like there's a little bit of liquidity up here. You could argue that these are equal highs. But I will add, the market is trading. Gold is the lagging mover. So what I mean by that is gold, we are barely getting to price action from 6 a.m. Central Time. Whereas silver is all the way back at Sunday's price action. It actually just played off of it, and it's coming down first. Whereas gold is barely there. So what do I think is possible? Well, here's the reality. Looks like I'm towards the end of the attention span of people here right now. But there's liquidity here right now. So I think gold could pull up a little higher and then sell off. So I think we clear 2404. Maybe we hit 2405, 2406. But over here, and then we see a drop. Now I would be wanting to manage this quickly. So I like 2405, 2406, just above these highs, honestly. So 24, even in 2404.5, and then seeing this thing work its way down would be interesting. So we'll see what happens. This move up, again, this was a push. This goes about 46 pips, give or take. This is already working its way down actually pretty well. So for all I know, this could just drop from now and then that's it. And then I just missed the trade. And that's okay. So not a big deal for me. If it does sweep these highs and it, let's say, just stops like right now and then goes up, perfect. Then I'll able to position myself, and I'm down for a trade like this. Could see it work. So we'll see what happens, but it's projecting right now. If this gets below 2,400, then I'm not chasing this. It's the trade's done. So if this gets below 2,400 right now, it needs to drop like 10 pips. If it were to do that, then that's it. We'll just wait for another trade. So we'll see how this goes. But risk reward wise, up to you guys. Trade your plan. So here's gold. Maybe we get lucky and it comes up again. Otherwise, it went down. I believe for the members, I believe one of our educators sent out a sell limit on this earlier today. So some of you may be in it. I'm not sure what the price was. I don't know if it was 24.04 or 05 or something. But yeah, something like that, if I'm not mistaken. And that's it. Now silver, again, silver 5-minute time frame actually to go bullish, but I want to see if we can get into some buys, because I would like to get in buy positions with silver. Silver does a good job pressing down, drops price here, liquidates tons of buyers, gets into this area here, and then chops up a lot. But this was a sweep. This squeezes a ton of money. Brian called buys on his session, so he caught the move up. Nice. And then we have liquidity here, but I would want us to get higher highs first. So if we're gonna look for buys, because I think silver is leaving some traces that it could be setting up for a buy, I would want to see some good structure, pull back, and then we let this thing rip from here. So something like that would be pretty sweet. But first we need to get this, and we just might not get it at all. So that's just something to keep in mind. All right, so that's gold and silver. Natural gas. Natural gas's pullback, I think, is over. We took positions on this in April, and we saw an insane move up, and now we saw such a good. I mean, this was working its way down for about 5 weeks or so. I did think we were going to get a little bit lower. I feel like we have quite a bit of an imbalance left behind still down over here, unless I need to get into smaller time frames and look at this over here. But right now, I mean, we saw a big move down, and the market kind of slowly, organically has worked its way higher. So we did get above here during this session. If this kind of chills out, and I say if we get another day up here, then I like the buys. If this aggressively comes back down, then this might have been another, actually a liquidity sweep. So we'll see, because this came back up to fill in balance. So I'm curious to see this. Natural gas might be positioning itself for some long-term buys, some long-term longs. And then for those of you that were on the stream earlier this morning, this didn't trigger my buy by a little bit. This ended up playing off of this liquidity instead of the one down here. So it's okay. Missed my entry by a little. Price popped off. Didn't quite hold enough yet. So yeah, I mean, we're wait and see here. But overall, with crypto, guys, big picture for me. And again, you know, I told you guys, I literally said it 2 weeks ago. We were here. Now we're up here. We had the confirmation. Congratulations if you did something with it. And if you didn't do something with this because it didn't follow your own investing plan or your trading plan, that's great. Genuinely. So yeah, but anyways, right now, if you're feeling FOMO, you say, man, I should have done something during 4th of July weekend, blah, 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 blah. Instead, I went and just got, wasted, or spent all my money and I couldn't invest because I make poor life decisions, then it's okay. You have probably, I don't know, a couple weeks, and I think we'll get back under 60, 58 again over here, so not even a big deal. And you can get in again. So that's just what I would do, though. That's just me. Now, I am going to be taking leverage positions once we get down here with specific tokens. And I'm not saying this is going to be the high either. Right now, I'm responsive. Right now, I haven't closed anything. I'm just letting the market show a little bit more information. But if you're feeling FOMO, I would say at least I wouldn't get in yet. I wouldn't chase anything now. I would wait and see if we get back to these 60 and below now, or for all we know, this could just keep going. But these aren't the only options ever in life and stuff like, After I said y'all maybe made poor life decisions during 4th of July, I think I literally had 15 people drop off. Hey, man. I just speak it how I see it, all I know is hundreds of thousands of students that consistently don't do the things they're supposed to be doing. So I think accountability is really important. Oil. Actually, if anything, guys, if there is one thing to look at, oil had a pretty aggressive drop here. So this was this down? This looks like a weird. This might have been one of the data feeds that lost connection because of CrowdStrike. So hold on, let me look at US oil from a different perspective. Maybe this one. No, I think that's normal. I don't know. I wasn't watching US oil like a hawk, so I was like, this big drop looked kind of, it just gapped, but maybe that is what it is. So cool. Guys, big moves down. We had a nice sweep before we dropped off again, so possible sells over here. Otherwise, I'm still patient, and I have buy setups way down here, sub 74. Been waiting on this one. Otherwise, if we get back into 82s, I'd probably be looking to sell in that 82 range. Oh yeah, I apologize for absolutely nothing. What is it, Conor McGregor? But cool. So yeah, guys, we'll leave it at that. We went over a little bit of everything today. If there's specific stuff, then you guys could obviously always ask. But in relations to where I think overall markets are going, we got a lot of I definitely was. Oh, for the 4th? No, I was with my family. I was chilling. I haven't had alcohol in, I don't know, a long time. But no, not a faded Mago on that day, for sure. I was chill, though. Just chill. But with that being said, guys, I think with where we're at with everything in the markets, let me switch my cameras over real quick. Well, with where we're at with everything, still no signs of indices like fully capitulating or dropping. Cryptos, same thing. There was that little scare that 4th of July weekend with the huge drop. In my opinion, looking at the marketplace as a whole, yeah, I don't think we're going under that 50, 56 anytime soon. I think we're really gearing up for another leg up overall. So if you have, like, if I wasn't priced into cryptos and I've been waiting for my moment, 60 and under is like, it's like, here, this is it again, don't fumble. Obviously I am not here to give advice or any financial advice or anything like that. It's just what I would do. You know, that's just what I would do. Never telling anybody what to do. But also, you have to understand your philosophy and your mindset with whether you're trading or you're investing. What's the timeline that you have with that money? Because if it's money that you have, there's a ticking time bomb on when you need that money back. Then you run into issues, especially if you're not an experienced investor or trader. You know, like I know some people that want to leverage their credit or loans to do certain things, or, you know, you're using your rent money, and that's when you can get into trouble because you could be right, but your timing could be off. And then now you're overexposed, and now you're stressing, right? And so just be like, I would say, be frugal in these seasons so you can invest more, but not out of necessity, more through abundance, right? And as you gain more skills and as you dive deeper and research more, and you start to see more, okay, where are things underpriced or overvalued, etc., then, you know, you'll get better at picking and choosing your spots. And also use your resources. You know, use resources that have credibility, right? Like, for example, like the homie Mike Sotero has been crushing with the trade ideas, right? Nance has given some amazing entries with certain projects and with her trade ideas too. So, like, if you know people that are dialed in doing the work, it's like you hired your own investigator, your own researcher, etc. So just know how to pick the right people that at least can not tell you what to do, but give you perspective, put things on your radar, so then you can go and see, okay, let me now do my due diligence and make better decisions with my time, energy, money, and attention. So yeah, thank you for answering that question. I've been having multiple trade streaks of wins. Of course. Yeah. I mean, if you're winning, just know that you're going to lose eventually. Doesn't need to happen soon. And when you do, it's not a bad thing. Losing isn't bad, winning isn't good. It's just outcomes based off of your process. And that's it. What's up, Brandon? Love you too, man. Does Mike Sotero trade Wyckoff? He trades, I know he for sure trades, well, he learned from myself and a couple other people. And then obviously, you know, as a trader and as you get more experience and you gain insights, you know, you start to add your little flavor, your little sazon to your style. There's certain, you know, exit strategies that are a little bit different, but his entries are pretty similar to kind of the way I trade a little bit, kind of the way like Zachary and Jordan trades. Does he use Wyckoff? I don't think so. I don't think like he's a Wyckoff trader. I know he understands cycles, but I wouldn't say he's like nitty gritty, you know, LSPY, spring. I don't think that's really his game, but I don't know. I haven't looked into his exact method. All I know is that he's based. Just need to know how to take the losses too, 100%. So study the way you respond to losing, and then where that comes from. At the end of the day, it comes on. Look for the source. Look for the source of your actions, reactions, emotions, and bring it back as many levels as you possibly can. Like, that's one of the most impactful things you can do, is thinking about your thoughts, the way in which you think about those things, where they came from, who they came from, how they've evolved over time. There's different like scales of consciousness that will help you be more of an observer and kind of detach fully. So yeah. Being a great trader comes with the name Mike. I think that's 100% accurate. If your name is Mike, you should probably be trading. All right, cool. Yeah. Oh yeah. Like this thing. Hit the like button and stuff, and subscribe and all that good stuff. Tell people about it so that I can hit 10K, so that I can finally make my mom proud. All right, guys. Much love. Peace.